Attention audience, the rest of this evening's updates will be based on your subscriber request. Comment down below in this video for any and every crypto you want me to cover this evening. That's once again, any crypto.
VINCENZO'S Gold Crypto Investing. And you can see on this update, on this Saturday, beautiful Saturday, 88-degree, late July, if you can believe that already. We're just approaching the 1/3 of the way through summertime, which is amazing, and halfway through, a little bit over halfway through 2022, coming in on a midterm election in 3 months in the United States. That looks like Democrats, I don't see any way that they really win that many election seats. They're going to lose a lot. They're going to lose the House or the Senate or both, because people are not happy. And you can see in Australia, the housing market's slumped. Australian tumbling housing market. Australian home prices sink like the Titanic, right? Marco business, an Australian probably outlet. And you can see what it does here. You can see that, look at that. Weekly price movement. It's just falling after Sky had that brief skyrocketed in an overall falling market out there besides the COVID boom. And you can see the core logic home price index, that's Australian, probably similar to our home price index. And you can see they're down, they're falling in the 5 capitals, right? And this is going to be spreading around the world as interest rates continue to rise. And the United States this week is going to raise its benchmark Fed overnight rate 3/4 basis points minimum. And there's a possibility and a growing possibility of 1 full basis point. I actually think they're going to raise it 1 full basis point. And I believe that would take the core Fed rate to, I think it's at 1.5 to 1.75 right now, and that would bring it to 2.5 to 2.75, and that would be historically low still, but high from these astronomically low rates that we've had. And I think the 30-year fixed mortgage, and you can see the Bitcoin price, as I'm actually on my way to the golf course, so I'm going to be golfing for the next 4 or 5 hours, and then I'll make another update when I get out. But I thought this should be talking about the housing market, but you can see the Bitcoin price is now safely below the 200-day. And I think this is coming down like we talked about, the topping out. It looks like it wants to come down to that 19,000, 20,000 range. That's what we're going to watch out for short-term in Bitcoin. Could there be a little bit of a bounce back up or resistance at just about where the price is now, that uptrending yellow line, yes. But I'm more inclined to believe that overall in the next few days, I think the next major target and the next major move from its regional area is to retest these lower levels, right? And let's see what the 30-year fixed mortgage rate's going for right now, right? We're going to go back up to here, 30-year mortgage rate. Let's see what it's at right now. We were as high, yeah, see, it's getting almost back to its high. There was a brief moment where we got near 7, and then I think it was 6.9, and maybe almost touched 7, and then a week or two later it dropped down into the low to like 5.2, 5.5 range, and everybody thought that was great news, and that means 30-year fixed rates were topping out. But you can see, no, they're not. The 30-year fixed, 6.56 is the average going rate right now, and after the Fed raises rates, and remember, 12 months ago, these rates were, does it have a 12-month chart? If it does, I can't scroll out right now. But 12, 13 months ago, during COVID, these were at 2.5 to 3%. So these are double. These are 100% to 110% higher than they were before. And on average, it's adding $300 to $500 right now to the same mortgage you could have took out 12 months ago. That's the average increase based on the rates going to 6.5%. And after the Fed raises their rates this week, if they do one full basis point, instead of being 6.5% in the coming weeks, you're going to be at 7.5 to 8% for a 30-year fix. And now you're talking $700, $800, $900 more for a mortgage potentially 3 weeks from now than it was 12, 13, 14 months ago after the Fed raises rates again. And that's substantial, as that adds extra pressure to not only the housing market, but the used car market. That we're going to get into this. There's a huge used car subprime crisis that's going to happen, like the housing market crisis, where you have all these loans by people that took out massive car loans that they couldn't afford, right? But they were getting government subsidies during COVID that's now gone, and they've had to go back to work. And then in some cases, they're making less money, and even cases where they were making more money with their new jobs that they got, or laid off people going back to work. The inflation price, the inflation tax that everybody's paying is sucking away that disposable income that they thought they had that they no longer do. As you can see here, we had some burning. Look at that. We had a side of the road fire, as it's been kind of hot and dry up in this area. And somebody probably threw a cigarette butt, or the guy cutting the grass, or something like that, or even a dry lightning strike. But most likely a cigarette butt getting thrown out caused the grass fire there, as you can see. It's always interesting. But getting back to what I was talking about, that's taking away that money they thought they had. And I believe the next big boom, financial crises that blows up in everyone's face, the used car crisis, I think is going to burst before you have the big bursting in the housing bubble, even though that's starting to go with the interest rates. I think that's going to take a little bit longer. I think the used car bubble and the auto, not just the used car, but the auto loan bubble is going to pop, because these people they were taking out loans for $40, $50, $60, $70,000 as the average new car purchase. It rose to, I believe, $60,000, and the average loan that people are taking out on a new car loan is in the mid-40s. That's at an all-time high. And I mean, that's almost a monthly payment for 6-7 years that they let you take it out now. $1,000, $800, $900, $1,000 a month. The average used car monthly payment now is like $700 or $800. That's what a mortgage used to be, right? And these are going to go into default, and that's going to have a cascading effect to the banks that lent out the money to the dealerships and to the people that they lent them loans out, when they have to start repoing these cars that they don't want, because banks aren't in the used car business, right? They don't want to sell these used cars. They're going to be taking big losses on this, and that's going to have cascading effects as the housing market rolls over subtly after, and you start having foreclosures that are already rising. This is a huge problem that's coming, and this is a huge problem that's going to be taking place as the Fed, I believe, raises rates another full basis point. And I believe the Fed's going to be raising rates at least another couple of times this year. But I believe as the year gets towards the end, and sometime next year, if they don't do it at the end of this year, sometime next year, the Fed early in the year is going to be forced to pivot, as they're going to be within 12 to 18 months out from the next major United States election. And they're not going to be looking, Joe Biden's not going to be looking at the presidential election year to be in a big recession. He's going to try to be crawling his way out by hook or by crook. And the politicians and the federal banks and the Federal Reserve usually do it by crook, by lowering rates and printing money. And I forecast that to start happening at some point, but it's not going to be for the next 6 to 8 months at least, right? So like, subscribe, and share. I'm going to give you more of these updates on the housing market. This is more of a housing market update than a Bitcoin update, right? But I'll give you another Bitcoin update here briefly before I get on the golf course. Peace and love, my beautiful audience.